So just like a quick summary, the 50-year mortgage is being seriously talked about right now, and it's not an everyday thing for people yet, and it's not available, but it sure has been presented, and they are talking about the pros and cons of it and if it is even a feasible thing. But because it's on the table, it has brought up so much conversation. So I figured, why not let's talk about it here together, and maybe we can come up with some different points, and I'd love to hear all of your perspective too. So today we're gonna break down what it actually means for buyers and sellers to obtain a 50-year mortgage, and if it's hype or if it's good, bad, all of the in-between everything. So here we go. Because we have the whole housing crisis, right? And the affordability all together, they're actually discussing if a 50-year mortgage would be a feasible thing or not to basically get payments down. And so the conversation between lenders and everybody is, does it make sense to have a mortgage stretched out over 50 years versus the 30? Right now, you can walk into any mortgage holder and get a mortgage that is stretched out for anywhere from 15, 20 to 30 years. Most people opt for the 30 years because you're gonna have a lower payment. But also on the flip side, you are paying far more interest because it's stretched out for that much time. When you're talking about 50 years, that's literally almost double. There's a lot of things that come into play, like interest is a big deal. Like I literally broke it down and I was like, and we'll get into that later in the video, but I broke it down and it's literally more than double. In plain English, it's being considered because you're trading it off for a less cost or a lesser cost every month. Like you're gonna have a lower payment. So because everything is so tight for people right now and affordability is super tough, that's being thrown on the table as an option of maybe being able to help. It's kind of like switching from a car payment that you've had for 3 years and stretching it out to 8 years. So it's nice because you're gonna have a cheaper payment for a while, but you're not gonna pay it off until it's like probably worth nothing. So if you're a buyer and you're considering a 50-year mortgage and what would this actually do to your payment and what would it look like? Let's say you've got a $400,000 loan, and on a 30-year payment, you're probably going to, let's say your payment's like $3,000. On a 50-year, it might drop it by just a couple $100 a month, but it only drops it a couple $100 a month. The higher you go in price point, the bigger decrease, right? So it doesn't really help any of those entry-level buyers. It's the bigger home buyers that it's really affecting. But then in hindsight, you're paying so much interest that is it really even worth it? Because you could buy your rate down if you really wanted that to be down and your payment to be lower. It's just gonna cost some cash up front or some great negotiation from an agent. I don't see how, if you're an entry-level buyer, how the 50-year would ever help you, because by the time you have it paid off, I mean, you'll be dead. Seriously though, if you're like 30 or 40 and you're buying a house and you want to use this 50-year, like that doesn't make sense. And I personally, I wonder how the banks would back that, or like how the government would feel confident in backing that. I wonder if there's gonna be a cutoff, like you're too old. You know what I mean? Or maybe that they like that because maybe they'll get it back and they can I don't know. But that's just, it adds a different thought into it, because like your life expectancy is what, 80 years, 85? So basically anybody over 40, you're definitely never paying it off. So for long-term cost on a 50-year mortgage, you can literally double what you'd pay on a 30-year in short. The equity angle is you're paying it down so slowly that in 10 years, you've built way less equity than you would on a 30-year. So even though homes appreciate, your interest is building and compounding over time. And that's probably gonna compound faster than your house is appreciating, so. All right, so let's talk about the potential upsides. First-time home buyers that are very payment sensitive, maybe this would work. Maybe they just need to get into something, and then their plan is to really be into it short term, but it's gonna help them because they got like a really good deal on it. They're gonna pay it off, they're gonna refi or move. So maybe this is something good for them. I think that there's a time and a place for something like this. People in really high cost markets, same thing. They need to just get into something, and then their plan isn't to stay in it for 50 years. They just need something to help the situation at the moment, and then the plan is to get out of it. Another good reason it might work for somebody is, say they just went to school for a high-paying job. They have a lot of student debt, and they just started this high-paying job, and it's gonna take a little while for them to get the student debt paid off and get situated to where they have this income coming in all the time. That would be ideal for somebody like that just needs a lower payment for the moment. And I think a similarity of all of these potential people it would be good for is the same thing. They're not intending on staying in this mortgage for 50 years. They're going to short-term get out of it. They have a plan to exit. I think it's really bad for the people that probably want to stay in it for 50 years because you just don't see a good ending for it. So even though there are pros, you want to make sure you have a very clear exit strategy. So are you going to stay in it for 7 years? What do the numbers look like then? Is it 10 years? Is it just 3? Make sure that you have a plan to get out of it, because then I think if you're using it as a tool to just purchase something for the moment and then you're gonna get out of it quicker rather than the 50 years, then I think it would be very good for you. All right, so the biggest red flags for a 50-year mortgage. Number one is the interest. You're paying a smidgen down to the principal every month, but the payday is for the bank. They are doubling their interest pretty much every payment. Another thing that's super obvious is the slow equity build. Because you're putting so much to interest and it's all up front, where are you building the equity? And I think if we had a really low, like 3% interest rate, maybe that would probably work. But because the average house is going to appreciate about 2 to 3% per year, I don't see how your equity would actually compensate for what the interest would be if you were to purchase a 50-year at low sixes today. It's not gonna work out. So in 10 years, basically you could be pretty house poor if you're in a 50-year mortgage. Another thing is like being locked into debt at an older age. So we do everything when we're young so that when we're older, we are debt-free and we don't have the worries of money, right? This is the opposite of that. You're basically putting it off till tomorrow, and you're making a decision that will put you in a bad place when you're older. No one knows where they're gonna be in 50 years. You don't know what's gonna happen to you. You don't know what the market's gonna look like either. So if your average buyer is pushing 40 years old now, a true 50-year payoff means you're probably finishing that mortgage in your 80s. Most people do not want that hanging over their head at retirement. They want to be worried about if they're fishing or playing with their grandkids or what they're going to do for the day. So this doesn't really fix the problem. The real issue is the lack of housing, the affordability, and just high prices. So now we're just restructuring the mortgage. I don't think that's fixing the problem at all. I think it's actually delaying it and creating a bigger problem for the future. There was some places around the world that had and offered different financing, but it's no different than like private lending. So if you wanted a 50-year mortgage today, you couldn't just walk into any bank and get it because Fannie Mae and the government will not back any like regular loan that's over 30 years. There are private money lenders. There are banks that do their own underwriting. There is a lot of different ways that you can get money or a mortgage, and they probably would do a long loan for you. But think about this. You'd have to be a very, very secure borrower for a 50-year anything. Like that is so much time. And like, it's hard enough getting people approved for 30-year. There is so many different things that they have to meet and qualify for. And I just cannot imagine doubling that time. Like I'm sure the contingencies and qualifications would be very lengthy. Like, how's your health? Maybe they would make sure that you don't have any diseases or anything. Like they want to make sure they're getting their money out of this. It needs to be a smart decision for them too. So you can't walk into any bank and get one. And I know it's on the table, but I have talked to all my lender buddies and they think it's very unlikely that Fannie Mae would even pass anything like this. So in short, so many things would have to change for the lending system to start allowing 50-year mortgages that it's not anything that's on the table right now. In Northeastern Wyoming, if this was to become a thing, what would change for you buyers? Basically, if you're approved for it, you might get qualified for a higher purchase price. So that may help you get into a nicer home. But I'd still be asking, what's your long-term plan? And does this help you or hurt your wealth in 10 to 20 years from now? I mean, I kind of talk to my clients like that anyways, even if they're just getting a 30-year. What's your next goal? What's your next plan? Is this your forever home or is this a stepping stone? Because my goal as your agent is to be your agent long-term. I'm not just in it to close and then see ya. That's not my game. I want to have this relationship with you so I can help you make the right decision on this one and then move to the next one and so on and so forth. Ask yourself, hey, would this be a smart decision for me? What's my plan in 10 years? Am I gonna refi? Am I going to make a plan to do something else? Like 10 years in itself is a long time. So most people have a 5-year plan, not a 10-year. So make sure you think deep before you even think about something like this, if it becomes a thing. For sellers, if a 50-year mortgage ever went mainstream, like it could, it would bring more buyers into the market because they would be qualified for more. And I think that's probably the whole selling point or point of consideration for this whole thing. And it would possibly push prices back up and inventory would become tighter because you would just be opening the gates to buyers that weren't qualified for as much as they needed now. It might boost demand and it could cause a little bit of market volatility. I don't think people should be scared of this idea. I think people should be informed, not scared. Big difference. Know the math, know the payoffs, trade-offs, and just have a game plan in general. So my advice for you would be, first focus on what you can control right now, what your budget and your savings are, and then your timeline. And then second, let's remember cheapest monthly payment does not equal best long-term decision. Third, when these new products come out, 50-year, 40-year, whatever they are, they're not one size fits all. Get advice based on your age, your income, and your goals from somebody you trust and your real estate agent. So if you're thinking about buying or selling in Northeastern Wyoming and you want someone to walk you through it all in plain English, call or text me. My number is right below in the caption. And I hope you found this helpful. If you have any comments, questions, please put them below. Hit like and subscribe, and I can't wait to see you on the next one.